Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the spring housing market and why he's so excited to see stability as we go into this very important home buying season. Before we get started, I want to thank our sponsor, Trust and Will, for making this episode possible. Welcome back to the podcast, Logan. You are geared up for cold weather, looks like.
I am, with my fellow brothers and sisters across the country, gearing myself up because here in Southern California, it's like slightly sunny, 71 degrees. But, I hear it's going to be really cold, So I saw a bunch of negatives in the Midwest and I'm like, wait, I'm going to Boise next week. What is it going to be like? Is it going to be like when I was there last year? It's like 4 and 11 degrees. And I swear, I look out the window, I was like, there's White Walkers walking. This is not normal.
So I'm in Colorado, and it's it's cold for them. It's like 9 degrees, but Dallas is bracing for the storm that's supposed to come. We're recording this on Friday. So who knows what happens there. Hope the grid holds up. Hope everything goes well in Texas.
Well, and speaking of that, whenever you track weekly data, I always say like jobless claims data, whenever there's a hurricane, jobless claims tend to spike because people file for unemployment benefits and it takes like 1 or 2 weeks and then that spike comes down. For weekly housing data, of course, we had a holiday week to start off. So you're missing 1 day. So that already takes the data. But then you have a storm and everyone's getting ready for storm, and these things do impact economic data that you do have to adjust to. Right. And I think that's, the context you have to bring with tracking weekly data is that you don't want to make too much about one week if there's other variables that are not normal. I thought we did a good job of, talking about the pending home sales data because, we outlined it months before and said, hey, listen, but that existing home sales report actually finished at yearly highs. So it was a very high bar to keep. And then, you had the Christmas and New Year's and in the middle of the week. But here, holiday, you got a major storm across the country. So be a little bit mindful of the data for this month in that. And then if there's any rebound effect, be mindful of that as well. And that's, we try to average that out to make it a little bit more smoothly going ahead.
I also think you do a good job in the tracker of noting that, listen, here's this big drop or here's this big spike, but let's remember why. And you really walk people through that and go, I would give this, a lot of merit, or no, don't pay attention to this 1 week. It's not gonna, it doesn't mean anything.
Yeah. And I think that's, one of the things we talked about going into 2026, once everything's out of the Christmas and New Year's, things look fine. Purchase application data has actually had the best start in many years. Weekly pending home sales are positive year over year, but holiday week, Monday was so you just make some adjustments and you just go with the trend, but also remember the trend gets hit a few times. So the upside and downside, just make sure to put it in context. And then we just roll with the housing data all year long. That's what we do here every weekend.
We do. And okay, so Davos is over. We have all this. As the dust settles, what actually changed there? What kind of housing policy changes did we actually see?
Nothing too much. There's a lot of talk, but you know what? I think some of the housing policies might need Congress to sign off on. And whenever you're dealing with government shutdown stuff, and that, supposedly it's not going to happen, that, sometimes things get incorporated into shutdowns that are kind of last second ideas. But in general, at least from what was said, Trump wasn't too keen on the 401k usage. Also there, all there was a coded institutional, make it harder for them to buy homes. Again, they probably need some legal things from Congress to get something like that signed. Mortgage-backed securities was already kind of in play, but no real sense about what the capital gains story is. So a lot of ideas, but just remember, it's the midterms, and I think part of the things are a little bit more comfortable that rates are near 6%. Than, if rates were 7.5%, it's a little bit of a different story. But now that demand's picking up just a little bit, it kind of alleviates the pressure to a degree. And people laughed where President Trump talked about, well, I can make housing really affordable by crushing home prices. And a lot of people say, well, uh, we need to make housing less affordable to crush prices. So eventually in time, if anybody studied the history of home prices, right, whether rates were at 18%, 12%, 5%, nominal home price crashes are just really rare out there. And part of a lot of that is, sellers can't, if they're underwater, they can't sell their homes in the open market. They have to go through a short sale. So there's all these things that, my response to everything is probably not the most popular one. Just endure, right? The growth rate of pricing slowing down is good. Inventory rising is good. Housing affordability got better on its own. When rates fall a little bit, affordability improves in that sense. And that's how we've dealt it. But I think the problem is when you have 3 years of the lowest home sales ever, and in every survey, everybody's angry about something, that people tend to try to push something in. 50-year mortgage, that's obviously not happening. You don't hear anything about portable mortgages, or, there's all these ideas that were thrown out, and it's a midterms and stuff. So like we stressed from the beginning, don't take anything seriously until you get something signed as a law. Then after that, you could go into the what can or what can't happen.
I tell you what, I always so appreciate the data that we have and the way that we approach this. So today in the Daily Mail, right, which we can make fun of the Daily Mail, but lots of people get their news from social, from sites like the Daily Mail, from social, on those sites, whatever, or people sharing it. And their headline is Florida, Texas, and California lead America's housing crash as other Sunbelt states start to crack, as values plunge 7.6%. And that's from the Dallas, their Dallas number, 7.6% over a year. And I'm like, that doesn't seem like a crash for me. And I live in Dallas.
Listen,
what is your take on 7.6%?
Doom porn sells.
I know.
If we have not, I mean, I've dealt with this crew since 2012. We were we always like to rehash everything. But when people try to take one bit of data line and try to make it into economics done right, is just boring. It's just nobody. I mean, especially in this day and age, especially now with AI and everything. I mean, I'm trying to make it as entertaining as possible. But I'm going to give you something. There's a show, Saks Realty. I mean, if you ever wanted to do an anti-American propaganda garbage website, Saks Realty is it. And that's one guy I just want to light up in front of everyone. But that guy had Harry Dent on, and Harry Dent is just absolute garbage. But Harry Dent said there's going to be a 90% crash in stocks, and there's an 80% crash in home prices. I mean, even if you're intoxicated with crazy drugs, that's even a stretch. But 100,000 views, because it sells. It's you're supposed to get the attention of the person by doing this, and then when you look at it, but it's the world we live in. We've always said, myself and a few others, we've taken a crusade against, this kind of anti-American stance about, everybody's terrible, the whole economy is worse, and we all lay it back to one group of people. So it's always the anti-central bank people. It's always the skulls and bones of the New World Order and all that stuff, and nothing is going to change. These people are elderly Gen Xers or baby boomers. Are all going to the grave, just bleep posting for the rest of their lives. So it is what it is. This is just the world we live in. All we can do is try to get the proper information out as much as possible and counteract the doom porn. But it's just so much volume, so much attention, and so much hype. But we stick to the tracker and we go with it. And last year was supposed to be the first and second biggest home price crash post World War. It never happened, right? And they don't care, because the more incorrect they are, the more attention they get. That's just the world we live in.
So what are you looking at for the tracker this week?
So to me, I mean, for our economics summit in Dallas, Texas on February 10th, by the time that comes, we get a good idea of how the year is starting off with. And usually, the new listings data, I'm really keeping an eye on new listings data and price cut percentages, because, if you ever had a vertical impulse to housing showing cracks, those data lines would actually kick out really early, because by May and June, you get an idea of if there is anything called seller stress, seller induced stress out there. But I really just want to have new listings get above 80,000 and just hover around 80 to 100,000 like we used to in the old days, because most sellers are home buyers. And I'm hoping now that, affordability got a little bit better, rates are a little bit lower, demand's up a little bit. So, you get people more comfortable. But I think the stability of rates, going out for the spring, we haven't had that in years. We have not had stability in rates going into years. So I cannot wait to see how the data looks like if we just hang around in the low sixes and don't have these violent spikes up and down. And that part of me was, when the mortgage-backed security thing was announced, that was to me more of a defensive mechanism than an offensive mechanism, because the spreads were almost back to normal anyway. But it's to create a little bit more stability. If somebody had mentioned that to the White House, create a little bit more stability, and in that stability, the backdrop can be a little bit better going into the spring and summer, and then you get a little bit more of a functioning housing market. So that's what I'm looking for. Is always early on, you want to see the new listings data out there, and anything it picks up. And by the time it's spring comes, because what happened in 2022 was the craziest housing year ever. Out of all the things I've ever seen in my life, there was almost 3 housing cycles within one calendar year. And then you had home prices escalating out of control early on. That was the whole savagely unhealthy housing market was based on that principle, that it was very, very bad 2022. Then rates started to go up, but we needed rates to go up higher than what we were normally accustomed to try to create some balance. And then home sales started to crash. And then comes November 9th, right? November 9th, we're thinking, okay, now we're kind of think we can get down to 4 million. If the forward-looking data gets better, which it's showing, and then we get to 4 million, we should bounce. And now we're here in 2026, and that 4 million level held, right? The supply and demand equilibrium changed, and we're just doing this tug of war. So I'm fascinated to see how the new listings and how buyers and sellers work with stability, right? And stability is the key. And again, I'm biased. They don't want a 50-year mortgage, portable mortgage, any of this stuff. I just wanted the marketplace to just kind of let it do its thing. But as of right now, it's doing its thing, and it's so much healthier now than what we've had to deal with in the past. And that's why I'm excited about the spring. I want to keep an eye on that with a tracker going out. What we don't want to see is new listings data not grow. Like in 2023, we did not want to see the second half of 2022, where we saw new listings data basically go down to all-time lows, and that sort of continued into 2023. That would not be a healthy thing. So I'm rooting for new listings data to get back to normal. So we had a good start of the year, and that's something we'll go over with the tracker over the weekend.
I love it. So guys, look at the tracker. We made it so easy for you guys, and come to the Housing Economic Summit. You do not want to miss out on that thing.
Yes. And always remember, all these headlines about housing and everything, just remember, wait until something is signed. Okay, it might not even be enforceable until next year out there, but whatever it is, we're in a better spot in 2026 going into the spring, because of the Fed policy is less strict. Spreads are getting better. Spreads have a little bit of a backup protection on it. Inventory's up. Price growth is cooling down. All the things that made the housing market unhealthy in 2020. All of 2021 and early 2020, those things are gone, right? And with less volatility in rates, positive for everyone. You see how excited I am?
Yes.
This is the balance, right? The whole unhealthy housing market, we need higher rates. All these things came to this fruition, this backdrop, and this is what a normal housing market looks like without the drama in there.
So we need, okay, I'm all for that. Logan, thank you so much for being on. And maybe by the next time we speak, we'll have a new Fed chair. It could happen at any moment. So
Who knows? Who knows? Yes.
All right. Thank you.